This is an extremely powerful trend. First off, read this disclaimer carefully. We are going to go to the tech sector, and specifically we will look at the incredibly powerful cloud computing. Okay, 64% from the 52-week low and literally at the 52-week high. Very, very bullish, massively outperforming the S&P 500. If you look here, you can see that the ETF is first, Trust Cloud Computing. SKYY is the ticker. Okay. Let's start with some seasonality. So which months are good for SKY? We are in June. June is a mediocre month. However, July, which is right around the corner, is actually a rather strong month for SKY. That's interesting. That helps a bullish case. Let's look at the charts. Here is all the data we have, and you can see that we are up 262% from inception. The chart is quite clearly, it is rather bullish. I mean, we are making higher highs. We have a new all-time high at this moment. If we look at the history of this ETF, you can see that rallies and pullbacks, they usually are more frequent. Okay, that's the history. Hence, the recent rally here is an anomaly. There are, of course, changes to the economy which has contributed to a massive demand for cloud computing. Long term, I am definitively very bullish on this ETF. However, well, to be more specific, cloud computing, because ETFs, they come and go. Okay, the thing is that this move is still an anomaly. It is very excessive. If you look at the past rallies, like here, here, and here, there usually are some meaningful corrections. We are very above many key moving averages. Okay, yeah, so to sum up, I am bullish, but I would be more surprised if we did not get a correction. Though we are heading towards a strong month. It is just that a lot of fuel has been spent. If you look at the RSI, we do have a bearish divergence between price and RSI. The caveat is that we were overbought here. So that kind of changes that analysis. The accumulation distribution line shows that there's been massive buying. That's bullish. There is an 87% correlation with the S&P 500. So they do kind of move together. If you look at the daily data points, if you measure from the low here of this whole, let's rather pick this one. If you measure from this low all the way to the recent high, yeah, very, very nice move. We are currently above all the moving averages. The bulls are quite clearly in control. A bit of a bearish divergence on the RSI here as well. Even if we look further back to here where before we were overbought. Yeah, quite clearly we have a very bullish chart, but this rally, historically looking at the longer term for this ETF, it is an anomaly. It has gone a lot. We would, based on history, expect to see some kind of correction, which could be a good entry opportunity if you do not have a position. Okay. Let's talk a bit about the technology sector. Introduction. So one of the very interesting things about technology is that it is deflationary. It's deflationary. It basically means that the price, it goes down. You get more for your money. I mean, it is quite astonishing to see how quickly it has developed. But that's fantastic. The sector did, however, trigger one of the most famous, infamous bear markets. That was the dot-com bubble in 2000, between 2000 and 2002. The good news about that is that we usually see that the bear markets are triggered by different factors. Hence, because we have had dot-com bubble, it is less likely that the tech sector will trigger a bear market in the future, because bear markets, they usually are triggered by something we have not thought about, and tech frothy valuations is something that's very salient. You can make the same case with real estate, because we did have the real estate crash in 2008. It is unlikely that real estate will be the next trigger, but it could of course be some other industry, some other sector that we don't really have on the radar. Okay, the big question is, how far down the value chain do you go before a tech company is recategorized? As an example, would you consider Apple to be a tech company, or is it consumer discretionary? It's a bit of a tricky question, especially given that Apple products, they are priced at the premium, so they are definitively, quite discretionary. Another thing, I mean, this presentation is made in PowerPoint. Is PowerPoint, because I did pay for the PowerPoint, is it tech, or is it in the industrial sector? More specifically, business services. And it is actually a bit more difficult to draw these distinctions than you might initially think. Okay, so what then is a pure play? I think the most obvious, pure play, real, obvious tech companies, that's those who make transistors, CPUs, GPUs. As an example, this here is a CPU. Here you have some water cooling. Here is a graphics card, GPU. I mean, this is like hardcore hardware, like pure tech. The things that software, it can be pure-ish tech, but quite often it fits into another category. If you take a video game as an example, it is definitively a result. It's very much tied to the tech industry, quite obviously, but it is kind of a consumer discretionary product. If you think about Facebook, okay, you could say that Facebook is a tech company, but isn't it really in the communication services business? I mean, it becomes a bit more tricky. Take Google as an example. I mean, they make most of their money on advertising. Advertising is a business services. Business services are in the industrials, so it becomes quite tricky. Okay, let's look a bit more at this ETF. Here you can see that options is available and also short selling. The dividend is 0.34%, so you are paid the dividend, but nothing to brag about. Very nice gains. Year to date, 22%. That's great. If you look here at the ETF, you can see that assets under management is $4 billion US. That's decent. Average daily dollar volume is $48 million. Weighted average market cap 195 billion. So these are big companies. Price book ratio is around 6. When price book is below 3, that is when value investors become interested. But I'm not surprised to see these more lofty ratios here for cloud computing. 64 number of holdings. Here you can see some of the top companies: Amazon, Microsoft, fantastic companies. Alphabet, which is Google, Twilio, Citrix Systems, Alibaba, Splunk, Adobe, HubSpot, Salesforce. You do have a bit of a mix, which is it's nice to see. But yeah, I mean, these are, you know, cloud computing companies. Hence, to sum up my take on this ETF, I am very, very much bullish. This space for the long term, computing generally is a strong trend. Cloud computing is even stronger. The caveat I would have right at this moment is that we have moved a lot. Historically, we do see corrections here for this ETF. This is a bit of an anomaly. Though, what complicates things is that July is actually one of the stronger months for this ETF. But yeah, I would be surprised if we do not get a correction in the coming months, though. I would, but yeah. It is a strong trend. Strongly bullish. Let's here look at the futures, the S&P 500 futures. We did see that the SKYY ETF was quite strongly correlated with the S&P 500, meaning they do move together. If the S&P gets into trouble, that could become trouble for the SKYY. Okay, so tonight we actually did see the futures go down quite significantly. There was some new panic about the China trade deal, but through the miracle of tweeting, we now have news that, well, things are actually not that bad. Okay, obviously there is something afoot with that trade deal. They did correct the statement after the market panicked, but the thing is that China, they are fully aware that they have influence on the US stock market. Hence, that's something they can use as a leverage. They can become hard to get and pressure Trump and his administration to make numerous concessions. This candlestick right here was fantastic news for China. They know they have more power, and I would expect the trade deal to pivot more now in favor of China. So that's something to just watch out for, because that could trigger some flexing from Trump. If he sees that the Chinese negotiators are starting to become a bit more cagey. But yeah, let's stay tuned. All in all, the bulls are in control. Though here they have a very firm control. Here it is a bit more rocky, and you can see that they're actually, if you compare this situation to this one, this right here, this was actually much stronger. You can see here, especially with the candlesticks on the futures, there's been multiple days now where there was a lot more bearish sentiment than what you would think if you only looked at the closing price. This is why candlesticks and bars are important, because they do give you that picture of what all the participants were doing. You can see that the bears are trying something here. And as I have said before, as the data clearly shows us, the current month is not, a strong one for the markets. Especially the later part of June tends to be weak. Here is the S&P 500, June is weak. Let's look at the Nasdaq, which is a bit more relevant for the ETF we looked at. Do it like this, and so you can see that June is one of the weakest months. July is quite strong, which is something we also saw on the SKYY ETF. But yeah, that is just something to be aware of. Whatever you do, of course, don't fight the trend, and may the trend be with you.